Hey guys, welcome to my channel. Welcome back. Anybody who's been subscribing knows that I've been a bear. I've been short this market, and I've been long gold. And those trades today are absolutely killing it. So let's get right into it. Let's get right into the charts. We're going to use technical analysis to analyze the markets, get a good read on where things stand today and where they look to be heading here in the future, so that everyone who's following along can make money. So let's get right into it. All right, NASDAQ futures. So we've got resistance right up here at this level. Let's see if we can find the level right there at 83.59. You can see we get that back here. Again, I just watch the NASDAQ futures to give me an idea of where the NASDAQ's going to head, and where the NASDAQ goes, pretty much the market goes, because of such a heavy weighting on the FANG stocks. So NASDAQ futures, the point is also that everyone needs to understand is they popped the market today with the Fed news, and the market is selling off. So that's not a good sign for bulls that are hoping the Fed can basically save them, because at this point the fundamentals are pretty much a dumpster fire. I mean, it's just, you got unemployment spiking to Great Depression levels. You've got you've got businesses shut down. I mean, just the fundamentals in general are really bad. So the market is hoping, basically, that the market's trading on hope. Any kind of upside move right now is not trading on anything but hope, and it's trading on the fact that either A, they think that the market will go back, the economy will completely recover once this virus shutdown ends, and B, the Federal Reserve printing a bunch of money can save them. And, you've got the Fed printing money on your side, but you've got the economics and the actual realities of the world against you. So, I prefer to play the realities, and that's why I've been talking about gold miners, and I've talking about shorting the market. And anybody that's new knows, if you go back, I'll show you again, just so I can continue to show it. This trend line, this purple line, this is your bull market from 2009. I've had this trend line up here for about a year and a half. And basically, we broke trend back in 2018. All we did then was backtest, did a full backtest right here. And I put out a video right around that time saying I think this is the top. And if this is not the top, this is very close to the top. That was the one time that I basically called the top. The other times I was just looking for short trades, but that video I said, look, I think this is probably the top of the market. And boom, big old sell-off. So nailed that one. And this is your bear market rally. Look for the next leg down. I think we're starting it, if not right now, very, very soon. So let's get right into, let's go over to the Qs, and then we'll jump around a little bit more. All right, red trend line right here. This is your decade-long bull market support line. We'll go to the weekly chart here. All right, on the triple Qs, on the tech sector. So here's 2009, running up, held support, broke briefly, but the Fed kind of recovered that one, held support all through here, broke, and now it's resistance. So, and if I zoom into the hourly chart, the red line right here, that's that trend line. So held as resistance here, did another test again today, held as resistance so far, and we're breaking down. So resistance, this is resistance. So as long as it's there, then it's, you have to trade it as if we're at resistance. You sell or short at resistance, or sell your longs, whatever you want to do. But basically anticipate prices to move down. So that's kind of the bigger picture, and we'll just need to see this play out. But I think, this is the top area of this bounce. They might try to overshoot it. Maybe I could see them doing that, where maybe we have one spike through it, and maybe an hour where we can close above it, and then it sells off really hard. That would be a nice kind of trap or bull trap, basically, if we get that. So again, regardless, though, we're really close to where I think that this will be kind of the end of the rally, and we're looking to make the next leg down, and this could be a big leg. So A lot of the times, if you follow like Elliott wave theory and Elliott, I'm not a big Elliott wave person, but I take a look at it every now and then. And they say that the C wave, I believe, is the biggest wave. So you got the A down, the B up, and then the C is usually the biggest wave of the entire move. So that would make sense, and I think that could potentially put us, somewhere down in, probably below these December 2018 lows, probably down around this 130 or something like that. That's bigger picture stuff. Just want to keep an eye on the bigger picture. And I gave you the hourly, so that gives you kind of the short-term look that I'm seeing. So we'll keep an eye on that. SPY is doing the same thing. SPY is kind of, selling off. Not as much as Qs, though, actually, when you look. Qs with this hourly spike here, they popped it right to support, resistance, and then they sold off. SPY's still well below that trend line. And so we got to, that trend line's way up here on this purple line, way up here. So we're not getting there on the SPY most likely. And that's why I follow the Qs. The Qs, I think, is a better leading indicating indice. Okay, let's move on. Let's look at XLV. I was kind of looking at this one. So healthcare is holding relatively decent support. And, we had a breakdown. We're holding support. We're just kind of walking this trend line right here. And what I would say is just, this is a short on a break of the trend line, but until then, just let it continue to walk. We could be a bearish. Yep, looks like we're wedging out right there. So there's a bearish rising wedge. We have, let's look at the RSI. We have negative divergence on the RSI. See the RSI right here? I don't cover the divergences that often, but it's a good idea to keep an eye on them. So here's your RSI divergence. If I could get those things out of the way, you can see we made here's a high, and then we made a lower high. So the RSI is diverging down, meanwhile making a higher high in prices right here. So here's your high here, and then you made a higher high. They call this a divergent high, which is a new high on lower and lower momentum or less enthusiasm. So that tells me that this is, and we're also having a bearish rising wedge here. So this is, this is a short on a break of the wedge. That's what I would look to do. Break of the wedge would be an action, would be your trigger. Until then, let it continue to, wedge out. All right, let's look at this Apple. Let's look at this Walmart trade here. This thing has been working out nicely. You'll see here if I go to the daily, roll out. Here is your bearish rising wedge, big old wedge going back all the way to January 2015. And as we zoom in, you can see we held that right here. Held it here, and then again, just the other day, we were above it, and this is where I executed the short, was right above it. So we were trading above it, and I said, look, I anticipate this breaking down, closing back within the wedge, and starting to head lower, and that's exactly what we've done so far. That's exactly what happened. It broke down. We did a little back test there, broke down, and now, it broke down even more, and we're just kind of trading, but I think we go lower, so... This is the, I'm short this one and looking for this to, it can grind around a little bit before making the next leg, but I'm looking for this to, I'm looking for it to head down to the bottom of this range, which is down around $100. So that's really the trade, and I'll probably let that thing ride a little bit. I don't have a huge position, but I'm going to let it probably ride. It's a 14-15% potential profit. Let's see, what else do we got? Costco had a big sell-off today, which was interesting. And I've been, I was watching Walmart, and then I looked at Costco as well, because they're kind of the same play basically around this virus. People have been going to Costco and Walmart to stock up. The Walmart chart looked a little cleaner when it came to this bearish rising wedge, so I was interested in that. But Costco actually had a breakdown of 2%, so Costco's looking weak too. So that is a potential. That's a potential short as well. I don't know if this is the actual level you might want to short at, but yeah, you might want to wait for a pop up to 307, 308 or something like that. I I'm in Walmart, so it's the same trade from my picture. Okay, so someone said I should shorten my videos up, so let's get right into gold and we'll wrap it up. Here's gold bullion, just smashing higher, up 37 bucks, pushing up against the top of this range we've been in for a while. You can see if I scroll out back to the 2012 prices, this thing looks like it's just ramping higher. So basically what I see is we've got some right there is probably. Yeah, we already are above that. So, yeah, I'm seeing it right here. This is our next target, right up around there, 1780. So I think we're going to get there, and if we, maybe we have a little pullback there, and we're probably going to overshoot the highs of 1900. There's really no reason why we can't break these highs. We've got the momentum is to the upside, nice strong momentum, nice strong bull market. All the fundamentals are in place for gold strength, and it just makes sense that we would break above 1900. So 1900 probably gonna we're gonna break that, and then I think we'll start to see a lot of people starting to get really interested in gold, because that's when they usually the masses notice a move after the move has really started, and then they jump on, and then maybe we get some sort of a parabolic ramp higher. And I'll most likely be selling into that strength. All right, gold. Here's Barrick Gold. So we were in this range for a few days, just kind of plateauing. Today we're breaking out. So if this can hold, then that will be a breakout of this most recent range we were in. And here looks like they're trying to 2155. Let me look at that. See if that makes sense here. Yeah, I would say that's probably the near-term level for today. 21 right there, 21, 55, 57, something like that. You can see that held this resistance right here. It was resistance right here. We gapped above it, so we've got a couple reactions around that level, and then we're kind of right around there. But I don't know. I think this probably breaks out. Let's look at the volume here on the day. Yeah, volume's not we don't have volume yet, but again, it's 8 in the morning, so Pacific time. So plenty of time there, but this looks good. And if we break above and can hold above that 2155, then that's our next level, which is just the peak right there. We should overshoot it because we've already been there. This will be a second test. There's no real reason why that should hold. And if I zoom out, let's try to find the next level. Yeah, you can see I had this 21, this green line marked out, and we're above that. So this could be a breakout, basically. If today can hold strength and actually continue to build and get stronger, then this is a breakout, and that puts me for Barrick up around this right there. This somewhere right in there, around this 31, somewhere 31, 30 bucks. Could be right there, 28. Got another level right there. You can see it. It's a little bit higher. Sorry, I'm just kind of analyzing this as I go. It's about there, because you can see the reaction right here. So it was a reaction plateau right in this area. We had some reactions right around there, and then right here we had some reactions. So that's the level, and that's right around 27, 28 bucks. So that's your target. If we can hold strength today and build on the gains that are already there this morning, then I think we get to 28 bucks pretty quickly. And then, we'll probably have a reaction right around there. So that's that level. AEM moving higher, looking good. Here's a kind of my first profit target, 53.25. Next profit target, 57.50. And I'll be looking to probably take a little bit of profit at each one of those. But still bullish. Everything looks good there. Silver's holding some strength. Silver looks like the AEM chart when I look at it. Just kind of uptrending. We had this flush out move here, and we had that across all the miners and gold. But that was really what I see as just kind of your margin call, bear bear trap basically, where the margin calls were firing off on the other stocks. People were having to sell their gold positions, their winning stocks, in order to cover their losers. So they had to, I mean, their brokerage makes them sell, and if they don't sell, then they'll sell it for them. So it does, if they didn't want to sell their gold miners, too bad, they had to, and that's if they were, in losing tech positions or something on margin. So this silver looks good. Yeah, I mean, it's starting to look bullish. Here's the dollar. Dollar's falling, not much. The dollar's been pretty stable, I guess. It's not extreme. We had this initial surge higher, and now we're getting the move lower. But I think this initial surge was just the initial reaction when the Fed did what they did, and when the market started crashing. This was the initial rush to cash. But I think now you'll start to see the dollar sell off and gold start to go higher, because now the Fed is starting to react with just trillions and trillions of dollars. They're essentially not allowing anything to fail, which is absolutely crazy to me. But they're essentially just buying everything, anything that's weak, anything that has problems, mortgages, mortgage companies, airliners, cruise lines, literally everything. Is getting some sort of a bailout, either through a loan or a grant or just money pumped in, and so they're not allowing anything to fail. And that clearly speaks to me and says, okay, they want the dollar to fail, not necessarily fail, but get really weak. So they're saying, look, we're going to keep everything propped up, and we're going to sacrifice the dollar. And that's why these miners should have really, really good, they should just continue to perform. They've been working, they're Barrick Gold, from where I started talking about it and recommending it, was right around down here a year and a half ago. And from the low right here in 2018, Barrick Gold is up 130% and still looking good. So this thing can easily have a this can easily run up to the 55, 56 range, and that's a 500% gain, and it can go even farther. I mean, ultimately, I've talked about it, I think 75, $100, somewhere like that, is probably the move that we're going to see in this bull market for Barrick. So that's a potential huge runner, and that's how I'm trying to play it. All right, guys, that's all I got for the video. Just kind of macro stuff today, because there's big items that are happening. I don't see any individual stock trades that I'm too interested in. I took trades this morning on NUGT, NUG, made some money there. Took my short, Triple Q short is doing well. Added a little bit this morning, and I trade stuff. So yesterday when I added. I sold the additional shares that I added near the low, and then I bought them, or I shorted them back again today. So I trade stuff, but I still have core positions. I still keep a core position, because the core position is traded around the bigger moves that I think are going to happen. So thanks, guys. Let me know what you guys think. Give me thumbs up. Appreciate it, and I'll catch you guys on the next video.